Hey everybody, Kurt Henry here, mortgage broker at the Mortgage Center. We're your go-to mortgage broker in the Durham region, and this is a weekly mortgage market update just to let you know what's going on in the mortgage market. I just wanted to cover what the real estate market is doing and how that translates to mortgage payments. So we know that the average price of a detached home in Oshawa in August of last year was $862,000. We also know the average price of a detached home in Oshawa in February of this year was $1.2 million. Which is about a 41.5% increase from August of last year to February of this year. We also know that the average price of a detached home in Oshawa in August of this year was more like $855,000, which is about a 30% decrease from February, but it's about the same as what it was in August of last year, because again, August last year was $862,000, August of this year was $855,000. So it's a $7,000 decrease so far, which is less than 1% decrease year over year. Now, the interesting part is if you were to take an example, let's say you purchased a house, or you could have purchased a house in February of this year for $950,000. The minimum down payment on a $950,000 house would be about $70,000 down. At the time in February, the interest rate, the mortgage rate, would have been around 2.89% for a 5-year fixed rate at that time, which would have given you a mortgage payment of around $4,279 per month. Now, let's say you take that same house and you decrease it by 30%, because that's what the average price of a detached home in Oshawa has done since February of this year. So if we decrease the $950,000 by 30%, that means that that same house might be worth, let's say, $665,000 today. So the minimum down payment on a $665,000 house is going to be around $41,500 instead of $70,000 that it would have been in February. In addition to that, we know that the interest rates have gone up from February to now, and the interest rate, in February was 2.89%. Let's say today it might be around 4.84%. So the mortgage payment on a 4.84% rate with a $665,000 purchase price with the minimum down payment would be about $3,712 a month versus the payment in February, which would have been about $4,279 per month. So my point is, so the decrease is about $567 a month that the payment has come down by, even though the interest rates have gone up. So the point is that, yes, interest rates have gone up, but the change in the real estate market has actually trumped the interest rates when it comes to monthly payments. So if you have any questions on that, feel free to reach out and we'd be happy to help.